All right, well, hello there, everyone. It's Mazske Finance coming to you once again, and I have two very special guests with me here this evening. I have both Helicopter Pilot Caleb and Lieutenant Bill. So, Caleb and Bill, one of you at a time, just go and greet the audience, please.
Hey, everybody. Hey, Mark. Hey, Bill. Thank you so much for having me on. This is really exciting. I think we should be able to provide some good info today about credit cards.
Hey, all. Great to be back again. Mazske, thanks for having me. Caleb, great to see you. And I am very excited to talk about one of my favorite topics today, credit card rewards, and how they can lead you to live a more fulfilled life without costing you too much money.
There you go. All right. Well, thank you, gentlemen. And I also have used credit card rewards probably for, 3 or 4 years now. And as you'll find out, we've all have used the Point Star benefit for free trips and other benefits, but we'll talk all about that. So how about to begin? How about Caleb? How about you kind of kick us off with this?
Sure. So kind of my first question for Bill, because he's definitely an expert in this space. Bill, who would you say credit card rewards are for? Is it for your average person? Like, can anybody do this? What should we be thinking about for a personal financial situation before considering getting into this hobby?
That's a great question. This kind of leads into what I tell all people who ask me about credit card rewards or who say they're thinking about getting credit cards. I like to tell them that you better have complete control of your spending, first of all, not be an overspender, not be somebody who can't pay off their bills twice a month. I talked about this a little bit in our first video, Mark, where you need to be able to pay your bills off multiple times a month and have that zero balance. So this can be for everyone, but if you don't have that discipline and that mindset of I'm not going to carry a balance over from month to month and pay interest, then credit card rewards are not for you because it defeats the whole purpose if you're paying interest. You want to be doing this for as close to as free as possible.
Definitely agree with that. Yeah, you have to be a very disciplined spender, and definitely come at this from like a business optimization aspect. This is not something that you should allow to affect your behavior to, like spend money or ever pay any kind of interest or fees that are not completely necessary. Really, like we should approach this like interest on credit cards is evil because it's, typically 18% or somewhere in that ballpark, and we're not paying that. We don't ever plan to pay that, and we don't ever suggest that anyone else does either. So Bill, for the next one, like what's kind of the whole reason to go sign up for a credit card or potentially over the course of time, multiple credit cards? Like what is sort of the benefit that we're going after here?
I think for most people, it would just be the travel benefits. That seems to be what most of the major credit card companies are geared towards providing, is either direct credits for travel. And I know we'll get into some of the cards later, like direct dollar credits for travel, or you just build up a points bank and either transfer them to airline partners or use them directly through credit card companies' portals to subsidize trips that either you wouldn't be able to take normally or trips that you do take and just make them a little bit cheaper for you.
Gotcha. Yeah. And I know all three of us have done this a fair amount, but just to name a few things, like you said, Bill, you can get cash, you can get airline points, you can get hotel points, you can get straight up free airline tickets or free hotel nights. You can get free groceries, free Ubers, free Uber Eats, and an assortment of other things that we've done that may be more in the intermediate to advanced level, but there's definitely a lot you can do and a lot of money to be made and a lot of lifestyle improvement to be had for little to no money out of pocket at all.
One quick thought on that. One thing you didn't mention, I've used points for gift cards, like Airbnb gift cards. I get a $500 Airbnb gift card. I think one time I got 2 of them and stayed in Airbnb for 10 days, and it was completely covered with those points.
Yeah, absolutely. So I think a big concern, though, Bill or Mark, either one, feel free to jump in on this one. Wouldn't this impact my credit score if I was to get into this?
Well, I'll kick something off here real quick. Before I got started, maybe 4 or 5 years ago, I went to get a phone through Google, and they had an option. You could get like a year payment plan with no interest, or you can pay cash to get it. And I was like, well, I got the cash to buy it, but no interest. I'll do it for a year. So I go ahead and click everything, fill it out to get it. And they denied it, saying my credit score was too low. And I was like, what in the world? So I pull up my credit score and it was like in the 600s. And I'm thinking to myself, I have a paid off house. I have no car loans. I have no debt whatsoever. I should be the perfect person to have a high credit score, but it's lower. And so I don't know who I talked to or what I did next, but then I get my first credit card and all of a sudden my score starts going up and it's continued to go up. So, and I'll tell my score later, but I'll throw it over to Bill now.
Yeah, I would say this goes back to the being disciplined thing. As long as you are disciplined and methodical in how you apply for and accrue credit cards, if you choose to get more than a handful, not only does it not hurt your credit score, but it will help your credit score over time. You may take, and you not may, but you will take that little dip at the beginning where you apply for a new line of credit. It does a hard inquiry probably for most people and most credit cards. Your credit score will reflect that temporarily. But what I've found in my experience of getting a large number of credit cards and the 7 mortgages over the last few years is that it always goes back up to either the same spot it was or higher later on as you continue to build up this available credit bank. And like we said earlier, maintain that zero balance or as close to zero balance as possible.
Yeah, I've definitely seen similar. When I first started out, I think my credit score, and I was 22-ish years old at the time. So I barely had any credit to begin with, but I think it was maybe in the high 600s, low 700s. But the longer I did this and the more credit cards I got over time, like Bill said, maybe it dips 5 points or something. But over time, it's going to continue to go up because the factors that go into your credit report, and you can Google this, having more lines of credit is actually a positive metric. Having more hard inquiries is a negative metric, but has a very minor impact. So having a bigger line of credit relative to what you're actually ever putting on the cards is actually better, and having a greater number of credit lines is actually better. So in all of those ways, like your credit score is actually going to go up over time. And an additional factor is the average credit age. So as you get new credit cards, or whether it's a car loan or a mortgage or whatever, that's starting out at 0 years, 0 months of credit age. But then once it's 1 month old, 2 month old, 3 month old, eventually you'll have a bunch of lines of credit that are several years old. And if you get a new one that's 0 months, it doesn't drag the average down by any appreciable amount. And so you're going to have an increased credit score in the long run, and it'll be fairly bulletproof for the average credit age aspect of it.
Right. Yeah, good point. One thing on that also with credit cards, like say if you get your first credit card, say it had a $5,000 balance, or $5,000 limit, and say your balance was $2,500, you're using 50% of your available credit. Well, let's say time goes by and you get, to make easy math, 10 credit cards, and they all have $5,000 credit limits. That's $50,000. So now if you have $2,500 on it, it's a much smaller percentage of your credit limit. So even though you have more credit cards, it looks a lot better in the eyes of the creditors, and you have a higher credit score, and you can get better terms when you do take out loans.
Yeah, absolutely. Definitely. They call that your credit utilization ratio. And when it's a percentage. So like you said, if you got 50 grand, 100 grand worth of available credit on all these cards and you're using nothing, or God forbid you forget one or whatever, and you have, let's just say $1,000 statement balance at the end of a month, that's 1%. That is drastically lower than the average, or even what's considered good at about 20%. So keeping as close to that 0% ratio is great. And the more credit cards you get, the easier it actually is to keep your credit utilization ratio low.
Yeah, thanks, Bill. And so this will be the last question for this part 1 of this video. But Bill, you mentioned statement balance. Can you explain to the audience the difference between statement balance and current balance? And which one am I paying interest on, and how exactly does that work?
Yeah, absolutely. And it depends on the credit card company of when your statement balance actually begins. But for most people, it will just be the day of the month that you got that credit card. So let's say you're approved for a new credit card on the 20th of a given month. For the rest of the life of that credit card, your statement balance will close either on the 19th or 20th, depending on the company. And it's crucial to know what that is, or if you don't know the exact statement balance, to just have a habit of paying off sometime in the middle of the month, at least sometime before your statement balance, to get that balance down to zero. If you do not, and you carry a statement balance over to the next month, and some companies have grace periods where you can pay the day the statement closes or the day after, and you won't accrue any interest. But for the most part, if you carry that balance over past the statement date and you see that statement balance is more than zero, like you said, current balance is what your actual balance paid off is at that point on the card. But if you have a statement balance, generally you're going to be charged interest on that amount. And like we said earlier, it can be anywhere from 18 to 24, 25%, which doesn't seem like a lot if your statement balance is low, but over time, that is a killer and is completely what we're trying to avoid here in this game.
Yeah, definitely. All right. Thanks, guys. That's all the time we got for part one. Guys, make sure to tune in to the second part of this series to find out how to make some money with credit card bonuses.
All right, sounds good, gentlemen. So Mazske Finance, Helicopter Pilot Caleb, and Bill will be signing out of part one, and we'll be back for part two. So stay tuned in.